Hello, good evening, good morning, wherever you are from, wherever you're located, and a warm welcome to the 105th Business and Banking Show. Uh, Thank you for participating through EPS channel, YouTube, Facebook, Twitter, and LinkedIn. Today, we have a panel discussion with subject matter experts on the new umbrella entity proposed by the Reserve Bank of India. As you remember, we had the first show, a first NEOU panel discussion on the 100th show. When we were celebrating the 100th show of Business and Banking Dialogue, we also had the panel discussion. Uh, Today is also a very important day. While we have this panel discussion, the NEOU 2, as I call it, uh, new umbrella entity 2 discussion, today is also the EPS Founders Day, or it is called the EPS Day. So it's a equally a great day, like the first show that we had today. So the idea of the new umbrella entity is thought-provoking, innovative, and will be a massive boost to retail payments in the country. It will usher in an era of services that will complement and supplement existing payment services for the good of retail industry as well as the people. It will open up a lot of opportunities in various industries. People would look forward to making payment services ubiquitous and interoperable. Now, let us hear from our experts. What they have to, what is their opinion on the entire NU organization. Today's theme is the services and challenges of the NUE. So let me briefly introduce. I don't think they all need any introduction. They are all well known in their own field. But in the panel, we have today Mr. Sambamurthy, ex-ED of Indian Bank, Chairman of Corporation Bank, ex-Chairman of Corporation Bank, and ex-CEO of IDRBT, which manages the payment gateway for NEFT RTGS. So that's very important. The payment gateway of which he was a CEO. We have Mr. Navin Surya, ex-MD of ItsCash and Chairman of FinTech Conversion Council. Mr. Mihir Gandhi, partner at PwC consulting company. Mr. Vivek Iyer, who is a partner at Grant Thornton. So, ladies and gentlemen, we have a great panel out there, and the moderator for this show is Mr. I mean, you must have all seen him before, CNBC TV 18 anchor, Govindraj Ethiraj. So before we begin the discussion, I hand it over to Govindraj. Let's get a special video of the NUE. Let's have a look at that. So the digital team, can you play the video, please? Thank you, digital team. That was a great video. So without, let's begin the panel discussion, and I hand it over to Govindraj. Govind, take it on.
Okay, thank you very much, KK. So what I'm going to do is I'm going to ask all our panelists to speak for about 4 or 5 minutes each on the new umbrella entity services and challenges. I mean, but more importantly, defining the issue as they see it from their vantage point, whether in a consulting firm or having been part of or an active part of the fintech industry. And then we can maybe have a conversation on what are the outcomes that we could have and what we could aim for. Given also the context in which the Reserve Bank has put out those draft guidelines and the spirit in which it has been received and responded to. So let me, about 5 minutes each for each speaker. Don't go too far, because the idea is that we all have a conversation, and feel free to be candid and as much as you can, and also feel free to have a conversation and don't necessarily wait for a question to come your way, and that will hopefully make this interesting. So let me ask Mr. B.S. Murthy to kick off. Mr. B.S. Murthy has already been introduced. He was last CEO of the Institute for Development and Research in Banking Technology, which makes him, of course, the right person to kick it off.
Yeah, absolutely. Mr.
Go ahead,
Murthy?
Mr. Murthy, if you can you are you able to hear me? Mr. Sambamurthy, can you hear me? Nope. Okay, maybe then I'll ask Mihir, can you hear me?
Yeah, I think Mr. Murthy has come.
Yes, I can hear you.
Yes, go ahead.
I think it's a problem.
Yeah.
First of all, congratulations, Mr. Mani, on the Foundation Day. It has been an excellent journey for you and brilliant performance by your team. And also, I think we should also congratulate investors who are back you on this Foundation Day. Well, I think let me share some perspective, little step back, what this new umbrella entity and all that. I think the payment system, as we all know, basically is playing a very crucial role in accelerating economic growth as well, for various reasons, variety of reasons as we go along. We will discuss. It's not about payment system per se itself. We need to see in the context, in the larger context of economic growth in terms of equity, quality, and also the quantity part of it and all. So many countries have realized this. Now they are redefining, reconfiguring the payment systems almost all across the globe. And we are no exception to it and all that. So having said that, why this new umbrella entity? I think one of the questions topmost in the minds of many people and all. And up until now, NPCI is the only umbrella organization. Probably, I think it has almost a decade-old journey now. So if you see that last 5 years alone, if you see their track record, their growth, the transaction volume has gone up from something like 3 billion to 26 billion, 1920, 2021, maybe about another 30 billion. The numbers are not out still. So it's almost 8 to 9-fold increase by the NPCI. So I think probably the authorities have seen an opportunity, I think, to further grow, to further probably grow exponentially, maybe 3 times, 4 times GDP. And we need to see the context of the payments scenario in the context of why, in terms of convenience, in terms of financial inclusion, in terms of democratization of the, not merely the payment system, but also the larger financial system, so that the financial services are accessible, affordable. That's one part of it. But today we also see another different context. One of the traditional view of payment system, payments and banks are bound together all over the world. But in the last maybe 6-7 years, with the advent of companies like Alibaba and WeChat, I think the whole game is changed now. Now payments is now more getting closer to e-commerce rather than the banking system. So we are going to see more and new players in this game. And there is a huge opportunity. In fact, if you look at the Nandan Nilekani committee report, he has highlighted number of probably the areas where the payment system need to grow, both quantitatively and qualitatively. While we are happy, there has been explosion in the digital payments, especially after UPI by NPCI. But there are a lot of opportunities. For instance, the whole volume is coming from about 100 million users. While we don't have the exact numbers, that is the estimation of the Nilekani committee report of RBI. This needs to increase to about 700 million. That's one part. There is a huge opportunity to do that. Number two, there is a huge imbalance between issuance infrastructure and acceptance infrastructure. What is that? For instance, we have about almost 1 billion debit cards, but hardly we have about 4 to 5 million POS machines. And QR code is yet to probably be adopted on a large scale. So these are another opportunity for any new entity to grow this in this area. And then another probably measure of the opportunity is that if we see per capita transactions, digital retail payment transactions in our countries, just something like about 19, it's likely to go to maybe 22 in the next 2-3 years. From about 2 transactions per capita about 5 years ago, we are moving to 22, and then compare it with other countries like Singapore. Singapore has about 700 per capita transactions. A number of other countries in Scandinavian countries about 400 per capita transactions. So viewed in this context, global context, there is a huge opportunity for the digital retail payments to grow. And as I said again, we should not see it in a kind of silo or a standalone payment system. The payment system we need to see in the context of greasing the wheels of commerce, greasing the wheels of economy, make it more convenient, make it more cost effective, make it more secure. So it is in this context, I think Reserve Bank thought it fit to invite entities who are interested in setting up these umbrella organizations. So I'm sure that there is a huge opportunity, and then there are, understand, a number of aspirants. In a way, the success of NPCI itself looks like probably inspired the regulator and the government to create many more such organizations. But as we go along, it is not about cloning NPCI. Much water has flown in. I mean, in the last 5-6 years, I think there is scope for innovation in terms of business model. There is scope for innovation in terms of operating model. There is scope for innovation in terms of changing the cost structures so that it's more affordable, accessible, democratized, and inclusive growth. So these are my few initial comments.
Okay, thank you very much. Quick question. What do you see the potential when you say per capita? I think you said Singapore, for instance, at 700. Where do you think India could go, even in the near term?
In the last 5 years, it has gone by 10x. They said from 2 to 22. Of course, we have a low base and all that. I see in the next 5 years, there is a scope to grow for at least to 250. If not 700, it will take some time, 250 to 300 per capita. But again, it needs to be not that by a few smartphone-based kind of transactions. It need to be much more inclusive. So these can be achieved only if you have probably mobile applications on the feature phones, not just confined to smartphones.
Right. I was saying that I think AP Hota was saying that, the number of transactions has gone up 5 times in 5 years, but the number of customers has only gone up 2 times. So do you sense any dichotomy in this then?
That's what I said, because these most of these probably volumes are coming up from smartphone based. Smartphone means mostly from the metro and maybe the urban areas. We have not reached out to the villages. For instance, we have got roughly about 400 million Jandan accounts. So, but you see that we have hardly about 100 million. So we need to reach out to more people. That's what I'm telling. There's a huge opportunity. From 100 to 700 million, I think should be the user base.
Got it. Okay. Mihir, Gandhi, it's over to you.
Hey, hi. Good evening, everyone. And congratulations to Mani and the entire team at EPS on the Founders Day. Always happy to be a part of the celebration and, remember our time a few years back. Coming to the specific topic on the umbrella entity and, what are we seeing in this space? I think if you look at the evolution of the payments regulations and the payment system in India, and I've been fortunate to be part of that since the last 10 to 11 years when NPCI was just set up and RBI had set up the Payment Systems PSS Act in 2008 to promote retail digital payments for the entire country. I think what very rightly the Reserve Bank is trying to do is take a lot of initiatives, experiment, and come up with new ideas on how to enable digital payments for the citizens of India and increase the adoption, the growth rate, as well as moving the needle of digital payment usage and transactions in India. So if you see from 2009-10, initially it was the PPI wallet instrument. Then we came on to the white label ATMs. Then we came on to the RuPay card, and UPI came in, IMPS came in, and then we had Bharat Bill Payment System, Payments Bank. Some of these have seen success. Some of these experiments have not seen so much of success. But I think it's all a learning game. And with that background in mind, RBI envisioned, based on the different committees and the recommendations, on creating parallel infrastructures and for the country, focusing on digital payments. So that's the background of NUE, and the draft guidelines did come up in February 2020, post which there was a lot of interest, activity. A lot of participants were trying to get their heads around it because not everything was clear. There were a lot of suggestions that were made to the Reserve Bank, and post which recently the final guidelines have come out by the RBI. A lot of the things are similar from the draft guidelines. However, some important points have also changed and been amended. So with that context, what we have been seeing in the market is, yes, there is definitely an interest. As Mr. Murthy rightly said, there is a huge potential for driving retail digital payments in India. Earlier in 2010-12, the percentage of retail transactions, cash versus digital, was in the ratio of 90 to 10, where 90% was still happening through cash and paper-based instruments, and 10% was happening, or less than 10% was happening, through digital payment instruments. With the passage of time and with all the experiments that have happened, and obviously UPI and few other instruments have seen a great success, that needle has moved to maybe 20 or 25% from less than 10% for the country as of today. Still, there is a huge potential to move that needle further to maybe 40, 50, 60%. And that's the power of the entire focus and thrust on why participants, why regulators, why the entire ecosystem is focusing on promoting consumers to use digital payments through different modes. With that being said, today the market is ripe for innovation. Today we are seeing a lot of interest from different types of companies. There are the fintechs, there are the big techs, there is also the banking community, which is doing a lot of innovation in this space. And eventually all of these companies are going to come together and set up different types of innovations on the payment instruments. The other point to note is, when we set up a country level infrastructure of this sort, there is always few key points or challenges that do come up in our head. The first point is, how do you get consumers to adopt a new payment instrument or a new payment infrastructure which the country wants to launch, with the legacy, with the consumer habits of doing things in a certain way. So I think the first point that we need to think about is the usage and the adoption of this new entity and how it is going to promote its infrastructure to banks and finally the end consumers that is going to use their payment instruments. So if we see globally, there have been examples in countries like Indonesia, Poland, etc., where there are multiple payment infrastructures existing as of today. So Indonesia has got 4 ATM switches or ATM schemes across the country, similar to India. India also has multiple ATM networks, but theirs are equal in size, much more active, and growing pretty fast. In Poland, there are 2 schemes that exist. One is Blik, and the second is Elixir, which has been launched, and they are also kind of grappling with the same situation and trying to get more market share. So globally, we have seen examples. The challenge remains on adoption and consumer usage. The other point that I wanted to make was, when we look at parallel infrastructures and systems for the country, we also need to look at different aspects of, some of these have been mentioned in the circular, on the interoperability, how a consumer transaction is fulfilled. The other point also remains on the commercial viability and the pricing. So we will talk about it, in this session. But I think the pricing and the commercial viability is very, very important. And even though the NUE or the umbrella entity is given the flexibility of opening up and charging the prices what they deem fit, still there is a question mark, and a lot of questions are still not clear and answered in the latest final guidelines that have come up. So I think these are some of the points that I wanted to make. The last point that I wanted to leave behind is this entity is going to focus largely on retail payments. The question that comes in my mind and a lot of people that I've spoken with is, what next? What is beyond payments? So how does this entity also look at things beyond payments? Because payments is just the start of the banking transaction, but there are so many other products and segments that can be potentially tapped. So with these few thoughts and questions in mind, I'll just hand it over back and we can continue this conversation. Thanks.
Right. Mihir, one example of when you say there are more products, and I mean, that's a question that I've been wanting to ask, and I'm sure it'll come up in our discussion, but give us one illustration of what could be that new product or differentiated product that might come because of a new entity.
So there are a couple of products that come to our mind. I think the first is we are largely focusing on the retail payments and the transactions between the retail consumers. But honestly, there is a large white space in the government payments today, which is happening in the country, both from a government to person perspective and from a person to government perspective. So when we talk about our DBT grants, we talk about our refunds on your tax payments, all of this is a government to payment or person kind of transaction, for which a formal infrastructure, a kind of needs to be laid out and handed it over to a platter on different levels: central government, state government, local government. All of these need infrastructure for fulfilling these.
Some of this already exists. You're saying that it can be expanded further.
It can be expanded. It can be made more unified. It can be made more consolidated. Right. I think that is something which is because, see, I'll give you another example. 100 smart cities came up or are in the process of coming up, right, in India, and they've been kind of given the authorization to go ahead. But when we speak to some of them, they are all struggling to find the right bank. Some of their payment systems for, accepting citizen payments are very, very old. They're not able to update. So where is this centralized infrastructure today? That is a question that comes to my mind. And after speaking to so many of them, that's, a big, big opportunity that I believe exists, which this umbrella entity can potentially look at.
Got it. And we're going to dive deeper into that. Navin, Surya, it's over to you now.
Thanks, Govinda. So many thanks and congratulations to you and your entire team on the Foundation Day. I think good to be here back again in the second session as well. So I think it's amazing statistics. One line, it's huge, or rather two simple word, huge opportunity. That's very clear. It's a space of huge opportunity. There are services that we will talk in the questions. So just to avoid kind of duplication, I'll get into straight some of the challenges. So there are a lot of interesting players who would want to do it, but what are the top 2 or 3 challenges that they are going to face? So first and foremost, as a challenge, I see in terms of it's contradictory kind of a thing, the policy stability versus sustainability. And both are linked. I'll tell you how. So we saw huge success with even NPCI. Mr. Sambamurthy told that how the whole thing changed, especially after the innovation with UPI. And I think let's not forget IMPS. I always say a bigger credit ideally should go to IMPS before UPI. Without IMPS, UPI wouldn't be here. But all that has happened amazingly well. But suddenly you see a policy intervention like zero MDR. Suddenly you see everything else under a flux. The whole ecosystem is trying to struggle. You create a domestic scheme like RuPay, and then you figure out the government has mandated that to not through Payment and Settlement Systems Act, which is actually the act to regulate payment systems and RBI, but through a finance bill and through a budgetary norm, and suddenly there's zero MDR. So it's a huge opportunity, but it's like a golden goose which is being killed prematurely. So somewhere we need to make sure that this opportunity remains viable and sustainable by not over-intervention of policymakers as well as regulators. I think the current framework, if you look at the size of the opportunity versus the size of notification, I think that tells it a lot. I actually like it that this is one of the simplest document considering the opportunity. Even if you look at PPI, which is a smaller segment, we'll have a larger number of pages on a policy and notification versus this. So the idea is to keep it flexible, open, and I hope that that remains going forward. And there are no adverse policy or over-intention. The challenge that we had in the last decade for payment industry, because it has been successful, it has been growing well, suddenly we see too many fathers, but to attest to everything and they all want to do something about it. And in trying to do something about it, it's getting messed up. So somewhere this balance between this policy stability, which will also lead to sustainability. And there are a lot of entities waiting to put right amount of investment behind the infrastructure to go out and penetrate this opportunity, because we all know this opportunity is not about half decade, 1 decade, but probably 3 to 5 decades as we go forward. This is one of that segment which can continue to grow, starting with larger 3 digit, probably 2 digit, even in 3 decades. So we shouldn't mess it up by creating inappropriate balance. So again, I would say that the first challenge will remain that there is a proper policy stability linked, which will actually drive the sustainability. And all these entities have to be sustainable because these are network of network. They have to be kind of very stable. So leading a point from network of network, my second point is about a, a truly interoperable system versus a walled garden. So the challenge is that is going to be in the next phase as more entities come in. While in a principle, in a spirit, the guideline says that all the entities have to be interoperable. And I believe technically they will be. But in spirit, if there are larger participants, if there are larger operator of a payment systems who are going to, let's say, get these licenses, if they're going to control that system themselves, the question to think is that how do we have a right amount of balance? But instead of creating a walled garden or an island, will they be truly interoperable, creating a genuine impact on the entire ecosystem, or will it be to suit only their customers, their network, or a limited impact? So that will be again a second challenge one will have to think out, both government, RBI, and everybody else, and even those entities who are doing it, because ultimately payment in this particular entity's role is being network of network. So they have to make sure that they remain network of network. It's always good to have a scaled ecosystem within you for these entities to be sustainable, to be able to become large enough and a meaningful enough. But we hope that they don't stay there and they don't use it to their advantage. We're already seeing certain issues with the large technology domain, let's say monopolies, which has certain issues which we are seeing in the media already. So it shouldn't lead to those kind of issues as we go forward. So one has to think through way forward about those as another point that we're looking at. The last one, which we briefly spoke in our last session, which was duplication versus expansion. So I wouldn't talk too much about it, but I genuinely believe, and as Mr. Sambamurthy said, that the whole intent behind this regulation is to be able to expand the market to where it is needed. We are still stuck to those 100 million customers, or if you really want to be kind of more optimistic, maybe 150 million. And that's a number which is roaming around in everything digital, be it e-commerce, be it digital payments, be it any other services which are digital. Unless we are able to move it beyond that and move to very quickly in the next half a decade to about a couple of 100 millions more, and in a decade, at least 500 to 600 million, we're not necessarily a truly less cash economy, which is the vision for which all this work is being done. Also, it would not result into a kind of digital India or a digital Bharat mission that we're all working toward. If it all has to culminate, we have to make sure that the entities which are coming in, they identify, like Mihir talked about some interesting area. Mr. Sambamurthy talked about certain segments, offline payments, feature phone-based payments, payments where smartphones are not involved. So how do we get more and more such entities out, which are genuinely not going to just replicate what exists, but rather work on areas which are white spaces, customer segments. And somewhere I always say that the challenge is actually equally in a urban area, not just the rural area. It's about the segment of customers and payments. So we may have a larger number of customers, even in places like Mankur, which are actually urban, but don't have access to these digital payments. How do we solve their problem? So we need to look at this as a demography issue, not necessarily the geographical issue. And hopefully there will be a lot of interesting solutions out there to overcome these challenges. Those are three buckets I'll put in. Probably rest we will do more interacting as we get into the Q&A mode.
Right. Navin, quick question. So when you talk about policy stability or you're concerned about policy stability, what is the one thing that worries you most?
Well, it's very simple. I mean, it's very dangerous when a government policy tells you that you're doing a business, but you have to do it on zero commercial, right? I mean, then how is it a business? Then you as well declare this whole sector as a not-for-profit sector, and then the government should run it. I mean, they could always say that we want to support this sector, which was the earlier norm, where you say that, okay, you be a reasonable charge. There are certain segment within your ecosystem you want to support, where government may decide or not decide to give a subsidy or a tax benefit or a concession. That's entirely their call. But telling an ecosystem which is still evolving, still growing, we heard Mr. Sambamurthy, the whole acquiring piece is so broken. It's still not there. And that needs a lot of funding. It's almost 5,000 crore worth of impact because of that one policy. And probably we have about 250 to 300 crore probably IDF created by RBI, which is good, but is that sufficient? So we are already grappling with the issue which needs more investment. So we need to make sure that we don't make those mistakes in the areas which are doing extremely well.
Got it. Okay, thanks. Vivek Iyer, you're next.
Hi. So the problem of going last is that most of the good points are covered. So, uh, uh, but I'll make an attempt. So one of the things that and I'll talk about what bothers me the most. I see huge barriers to entry in terms of, and because the cost of acquiring a customer is very high, and as a result of that, only the large players essentially are people whom I essentially see coming into the business. Which also brings me to the next point, that I don't understand why the guideline says for profit and not for profit. I think it says not for profit to respect NPCI. Because that's the only corporation that's there for not for profit. But I'm sure that pretty much after the competition, they'll change their model and they'll call themselves for profit, because that's the only way to sustain yourself. And having said that, one of the things additionally also that kind of bothered me is you have these large players who kind of come into the system, and the idea is build competition, it will promote innovation. But one of the things that always bothers me is the large players always want to consolidate their position and kill innovation. I mean, honestly, in terms of if I were, writing the regulation, it's a kind of a dream I live every day. Unfortunately, I don't write the regulations, but if I were to, I would probably say that each one of these organizations should, the large organizations, given that the scale is high on account of the numbers, the 500 crores and 300 crores net worth that's suggested, would that they actually need to also have some amount of fintech incubations that they actually need to do, have some incubators that they need to set up. Because one of the things that's also important is that we need to understand that innovation comes from the most unlikely place. And to actually facilitate and create that environment is what essentially needs to happen. I mean, interesting statistic is that, hats off to, what NPCI has done. I mean, literally in terms of, the different kind of innovations and all that have come. But there is only one offline payment services product, feature phone, the star 99 hash. Just that. Also, the additional piece that I saw is that they also said that the new umbrella entity can actually get into the clearing and payment and settlement systems. They can participate from an RBI standpoint. Now I'm trying to, I try to get a little creative, that if I were to create my own organization, what's this new thing? Am I going to also sort of try to do something what a CCIL does? Am I also trying to see in terms of what's the place that I can play there? Or, if, from a, as Mihir rightly also mentioned, the bulk payments piece is unaddressed. We speak a lot about retail, from that perspective, would there be something that will be an alternative to an RTGS? And that's exactly where the whole policy point also kind of comes into play. I mean, trust me, I mean, we are, the MDR is something that I am very, very deeply hurt about, and I will stop there because I'll only get emotional beyond this point. But that's one of the things. I mean, policy stability. I just don't know. I mean, there is this new umbrella entity. There are these tons of things that have been suggested, and there is a for-profit, not for-profit option given. And the way I read the guideline is, by the way, you can be for-profit. That kind of sounds a little counterintuitive because I'm running a business. I will be for-profit. So these are few points, and I thought, let me kind of put points that bother me on the table.
Yeah, Vivek, just when I look at the structure of NPCI, I mean, they too have, I mean, they may not call it profits, but they have a surplus. I mean, over 300 crores as per last report. So,
correct.
Which may not be distributed to shareholders, of which there are many. But there is a sense of, earning income over expenditure and retaining it for expansion or whatever.
Because they are the only player.
Correct.
You change that, and the not-for-profit model doesn't really work. Because even when each one of these models, from a surplus standpoint, I mean, I do understand when an NPCI was created, the intention was very noble. Let's create, financial inclusion, digital penetration. And over a period of time, we have kind of seen those changes happen. And nobility beyond a certain point, once you actually don't have surplus funds to create. I mean, a simple example that I would draw is, there was a lot of nobility in public sector banks about 40 years back. I don't think there is any nobility today with respect to public sector banks.
Okay, let me pose a slightly larger question. I mean, maybe just to maybe try and frame this in some historical context. So you had the Bombay Stock Exchange, and then you had the National Stock Exchange, and then you had other exchanges which came in. Nothing much fundamentally changed. And I'm only using the exchange example because the entry barriers are high. And since we talked about entry barriers, I mean, here too, there is a 500 crore entry barrier. So it's not like anyone can walk in. Of which only 40% can be held by one person. So therefore, you have to do some serious fundraising. So Vivek and then Mihir, right, others can jump in too. I'm saying, is this a similar, I mean, can we expect something similar? So Bombay Stock Exchange, I mean, of course, the reason why NSE was created is a little different, but the overall impact was to expand the market, was to bring down the cost of transactions, was to expand the equity cult, so to speak, beyond. So is this, I mean, could this new entity do something similar?
So in terms of if you were to honestly kind of seek my response, I see something similar happening, but I don't see the number being 2. I see the number being 3 or 4. I don't want to name the 3 or 4 because potentially I kind of live off the revenue that they give me from consulting assignments as well. But in terms of, I see 3 or 4 players who kind of will dominate this particular space, and at some point in time, I'll see the finance ministry also kind of go back on all their rolling back all the charges and the MDR initiative, those pieces that they're actually doing now. But I see 4 large players, if you were to ask me, including NPCI being for profit.
Okay, Mihir?
Yeah, so in my views, I think there are 2 things that we are expecting to happen. One, the first is, you asked whether it will be a like-to-like organization. You give the example of BSE and NSE. In my view, it will be some of the products and services that this umbrella entity that is being set up or gets the license, the services that it will offer. Some of these services will be similar to what NPCI is already offering today. Some of the solutions and services or the products that it will offer will be innovative, will be different to address, the white spaces, the opportunities that exist today in India. So in my view, it will be a balanced approach where, say, some part of it will be a like-to-like from products perspective, some part will be new, innovative, and experimental to get that segment or the white space kind of going. Right. But that's point number 1. The second point is in terms of how it is being set up and who are the constituents of the players that come together. I think that is a very important kind of point that we need to understand, because as Vivek earlier said, that having that fintech ecosystem incubation in some of these entities or consortiums is going to be the game changer. And when the consortiums are being formed, once they apply to the Reserve Bank, the kind of assessments, the kind of scrutiny, the kind of lens which will be applied will be very different for entities that have some of these flavors and mix in their consortiums compared to the consortiums that don't have this. At the end of the day, no one wants to have a large closed loop system operating in the country under the name of an umbrella entity, right? So I think that's my kind of second point, where I would see a lot of diversity, a lot of new players coming in this consortium, and the consortium that has this right amount of mix from a products and services perspective, as well as the entities themselves, will be the true winners in the long run.
Right. So Navin, why is there concern? Yeah,
just go ahead. Point on this. I hope it's not like BSE, NSE 2 model, because while the model is similar, the structurally, but let's not forget, payment is a product which every consumer uses, unlike securities trading, which is done by a lot smaller segment. Just a quick comment to add on. Sorry, go ahead.
Yeah, no. I was only using it conceptually. I mean, I was just trying to think back and say, okay, now which other model can I, and we have more exchanges, right? And they haven't done well. So let me ask you the other question. I can sense that there is concern over a couple of large players coming in Mr. Sambamurthy referred to, let's say, the e-commerce players becoming bigger than the banking players, and the Alibaba example. Now, and your concern, or at least one of them, was interoperability. Now, if I were to use another industry, let's say telecom, where the government very clearly regulates interoperability, and if you're not interoperable, then I mean, there are problems which you will face, or there will be there will be penalties of if you don't do that. So, is that the issue, or is the very presence of a highly capitalized, aggressive player the issue? And if so, then what's wrong?
So, I mean, it's a very interesting question, Govind. The difference is that in telecom, the product and its services is very simple, right? It's one single call. I mean, I wish the whole payment industry and the interactions of commerce has been so simple. So you then can just mandate the interoperability. I mean, let me give you one simple example. In industry, to get PPI interoperability from the association, it took us 8 years. And let me be very open. Even after implementing, we're yet to see one single PPI directly going live on a UPI. This is a reality. So, and I'm not putting anybody here as a fault, but this is a reality. So in this business, it's so complex that just by mandating, you may not achieve it. And so is there a solution? Maybe not ready, but this is a concern that we all have. We need to figure out that how does an ecosystem kind of really evolve where every consumer, every network is able to support each other, right? Exchange that way is actually by definition a closed loop model, if you see that way. You can't necessarily trade what you're trading in BSC to NSE and NSE. Right. So we actually hope that while structurally that's a same model, it doesn't happen here. That's what I meant actually.
Got it. Okay, Mr. Sambamurthy, can I come back to you? So you did talk about the large players. How, in your mind, do you see this evolving? So we, assuming a bunch of applications come in, it is logical that some would be from maybe a Geo or a WhatsApp, depending on what the specific regulations are. And what is the good thing that could happen, and what would be your concerns?
Let me not second guess what RBI would do, nor I give any kind of forward guidance to RBI what needs to be done. Now, I think we need to understand the fundamental question. I think it's important before we say what RBI should do. I think we need to have some clarity of the business model. I think, to me, it is the business model stupid that I think which probably makes or mars the commercial success of any umbrella organization. I think we need to realize fundamentally, payments as a standalone business is not viable anywhere in the world. I think we need to understand that. Anywhere in the world. So if you see any of these successful things like, sorry for referring frequently to WeChat and Alipay, because they're the most successful, that's where they leapfrog much ahead of US. They make most of the money in non-payment business. For them, payment is just embedded in e-commerce. So I think we need to probably find out a model. I do understand the anger and I would say discomfort over the policy of MDR. Of course, as I said, it needs to be probably determined by the market, but somehow government thinks by making it low cost that they'll be able to pump in more digital transactions, more adoption will take place. But that might happen because if you see the success of digital payment countries, even countries like South Korea, government has given a lot of incentives and concessions for all the intermediaries to switch over to digital. But we are going the other way around. So we need to, first of all, whoever wants to enter this business needs to understand, first of all, that payment business and a standalone is not viable, it's not profitable. We have seen in our own country payment banks, right? So because the other restrictions are also there, but because they could not do other banking activities and all that, so they're not viable. We have seen most of them have surrendered their licenses, and whoever players are there, I don't think they could scale up and make them profitable at all. But again, let us see the evolution in our own country. See, when IDRBT was handling these payment systems before NPCI has come into being, NPCI has come into being only 2009 and 2010. There, it was a society, so it was treated as a public good. The commercial aspect, pricing is zero. Forget about profit, not profit. At least when it went to NPCI, there is a commercial element. So they can have commercial revenues and costs are there. They can generate surplus, they can generate profit. Only restriction is they cannot distribute the dividend. And it's not cast in iron. It's only anytime they can change the status from profit to non-profit to profit. That's not a big deal. They can even get listed and monetize whatever the value they created and all. So this is where your question comes. Is it only like something like a clone of BSE and SE has come in? But we know the probably penetration of the equity cult that had happened, transparency, the costing. So a lot of advantages, I think, probably are there. But as Navin said, it's not about some 10, 20 million people investing in equity. We are talking of 1 billion consumers. So when you talk of a payment system or e-commerce, we are talking of 1 billion. So we need to come out with ideas, and I don't think one should clone NPCI.
Okay, I mean that's a good point to talk about. I mean, if the idea is not to clone, then can you regulate what the new players should be doing? I mean, could you say that no, you go and only do these kind of businesses? And if so, maybe wouldn't that be a new kind of trap?
I don't think there is any restriction in the new type of businesses. In fact, I think the draft guideline very clearly says they can innovate any new product. Any new product. I don't think there's any restriction. Even today, I think even NPCI can even come out with any new product, and there's no restriction even for the new players. So at least the saving grace is we have gone from zero pricing to pricing, and of course per profit, not profit, and then probably we are moving to per profit. And as I said, even if the big players come, my sense is payments as a standalone business is not viable.
Right, and you mentioned payment banks, and I remember I think one of the companies I'd spoken to was Tech Mahindra, and I wondered why they had got into it in the first place, but they were smart enough to pull out of it as well, and thus keeping their shareholders happy in the medium, if not long term. Navin, so the pricing, and you're concerned that tomorrow someone suddenly comes in and says that this is all going to be free or should be free because either there's COVID-19 or there's some other problem, or it's an underserved segment of the society, which by the way the RBI does want you to address. So how do you manage this tension then?
The problem here is the understanding of the issue. I think government wants everybody to invest where there is no viability. And at the same time, with the same breath, they say that while you invest, but you can't charge from them. So then it leaves. So the whole problem of that 100 million being served is this very simple understanding of this dichotomy in their mind. That if you're going to say that you have to serve the underserved and let's say unserved, but by the way, you can't make money from them, and by the way, you can't charge from them, then actually on the same breath, you just kill the objective. Rather, you should say that, okay, you're serving at the top, you continue, but if you serve them, you have to necessarily go at the bottom. You will not intervene there, increase the competition. That will always give you the best pricing. At the same time, if you want to further benefit them, I think a 0.5% GST benefit would have been sufficient. I mean, that's what you're charging in most of your debit card transactions, or UPI even lesser. A very simple Korea model of incremental digital business, where if you just give a GST or any tax rebate, that would take care of it with that cost. That's it. So this concerns remains high. There are multiple solutions, but this dichotomy that we want to help that segment, but we are trying to overdo, is actually creating complications. And then again, fintech has been one of the industry which has really attracted a lot of high investment, including payments. With all of this, you're actually suddenly creating an instability in their mind and are taking away the attractiveness of everything that NPCI has done, everything that every other payment entity has done in the country over the last decade or so.
Right, but to Mr. Sambamurthy's point that you can't really make money from the transaction itself, and you make money from everything around it or things around it. So what then is the opportunity?
So actually, there are two parts to it. One, in a very simple payment processing in a mass, you will not be able to make money, which is fine, but you want to at least break even. Let's not forget there are still services which are highly inefficient. Take the whole foreign remittance, which is also part of it, right? There's any one of us who are actually dealing either taking money in or taking money out in a foreign currency. We know what are the complications. You're never sure what price you're getting, what kind of a money you're being charged. There is enough room there to again simplify, penetrate, and grow. Like this, there are more areas. So while it's a retail infrastructure play, but within that, domestic, international, it's fairly open and flexible. So there are areas around it that you could actually create a sustainable model around it. Like I said, the challenge is that you don't want a policy environment when a sudden ad hoc decision, suddenly, because you will need to give RBI, let's say, a 5-year plan. You will give it basis today's condition. And actually, they will hold you still accountable to that plan. But all these conditions changing, then how do you really deliver that plan? So this is where I was pointing that can you somewhere align between government regulators and also say that while these entities are going to make bigger investment, you give them a stable environment for at least 5 years, if not 10, if not 10.
Right. Okay. So a good, stable environment that is predictable, which of course is almost contradictory sometimes in this environment, is something that is a prerequisite, at least.
Yeah, I meant that you can't take external environment, control it, but at least what you could control. You don't intervene in the things that you don't need to. That's it.
Right. Fair point.
So,
fair point.
so I just wanted to add to that. I've been
Yeah.
speaking to at least 15 to 20 people or participants that want to be part of this umbrella entity in the last 3 to 4 months. And over 50% of them have voiced this similar concern on the policy changes and the, directions, that may happen going forward. So they are concerned that what if the regulator says that now I want to control the pricing? You cannot charge beyond X or Y. Then what will happen to my business if I put in so much of money? So actually what Navin is saying is the reality of today. And a lot of entities are having that same question when they go forward for this umbrella entity application and coming together to invest such a large amount of money and time on this.
Right. Okay. So let's take some questions, and there are some good ones, and I don't want to leave them out, and I rather take them earlier. Pushpendra Khandelwal asks, I think this is aimed at Mr. Sambamurthy. Sir, as you told, in India, per capita transaction is 19. In comparison with Singapore, and you expected to go to about 250 in 5 years. My question is, transactions depend on literacy and cybersecurity, and our 70% population lives in rural India or Bharat. So in my view, to increase digital transactions, two things are important: education, expansion in Bharat, and confidence in people for digital transactions, particularly in Bharat and not in India. So it's a question and a comment. Would you like to respond?
No, I do agree. I think before that, I think let me clarify what I said. And I said business model is very critical. That doesn't mean I am happy with the MDR policy. I mean, I'm with the other panelists so far as MDR policy is concerned. And one, it cannot be zero. Number two, there has to be some stability, predictability. When the regulator asks, give me 5-year business plan. So whatever the assumptions are there based on present government policy, I think they should not be at least changed for that time. That's, I think, very important. Not that I'm advocating MDR should be zero. I think let me make it clear. All that I say that it should be determined by the market, and I'm going by the experience of the major players if we see globally. So that's very important. Number two, it's very important, I think, is to create confidence among the masses about the digital payments. For that, 2-3 things. One is the digital and financial literacy. Both need to be done on a much more larger scale than what we are doing today. And of course, some of the CSR funds I've seen that they're engaged in doing these kind of awareness programs and all that. So that is very important. Number two, most importantly, I think from a customer confidence point of view, is dispute resolution mechanism. So that also needs to be online. I'm not very happy with the present dispute resolution mechanism. Because, for instance, the UPI transaction drops, people do not know whom to approach. Should they approach the app provider, his bank, or NPCI? I think as the transactions are online real time, dispute resolution, at least at the first level, needs to be real time online. Then only I think you will have confidence of the people to do that. And especially because, as I said, that if we have to go from 100 million users to 700 million, much of which should come from probably tier 3, tier 4, the villages where probably I think we need to create a better ecosystem. And
Right.
one important point is, I said, huge imbalance between the acceptance in infrastructure, I said. We have 1 billion debit cards, but hardly we have about less than 5 million POS machines. Why banks are not going for acquiring, that is putting more POS machines? Because MDR is zero. So MDR is zero because our acceptance in infrastructure is not growing. So that is not growing. So we are not able to reach 700 billion. So I think this government and regulator need to address, because you can't tie the hands and say that, okay, grow the organizations and all. If there is no, I don't think there is a charity or philanthropy, whatever money that is coming. And I'm sure they come for some returns and all that. Yes, digital literacy is very important. Dispute resolution mechanism is very important.
Okay. Mihir, a couple of questions aimed at you. What is the position from our Gandhi? What is the position relating to interoperability amongst the multiple ATM switches in Indonesia and Poland? And there was another sort of related question that I saw. Yeah, are there parallels or learnings we can take from countries like Indonesia, Korea, or countries in LATAM with similar, not really, demographics or diversity? You alluded to ATM backbones, but do we have or see business model innovations?
Sure.
No,
So
but I
I
think
think
we need to pull out the point. Okay, sorry. Sorry, please go ahead.
Sure. So I think what you rightly said is that some of these countries have done some innovations. There have been some groups of banks or telcos or other entities that have come together and formed parallel infrastructures by taking the blessings of the local government and the regulator. Some of them have worked, some of them have not worked. For example, I'll give you the example of Indonesia. Indonesia, there are 4 ATM switches or ATM networks that have been set up. They have the current status is that they have not worked very well because of multiple factors, interoperability being one of them. And because of that, what now the government or the regulator is actually saying is that can they consolidate and merge them into maybe 1 or 2 kind of networks going forward. So that is one point where there has been some discussions going today. If you look at other countries, I think the parallel similar countries like India would be probably countries like maybe say I would say something like a South Africa, which has a similar a large population in the rural areas, not having enough access to digital modes of transactions, payments. Another one could potentially, if we look at China or Brazil, which is there, is also done pretty well in terms of some of the government payments. I think these are some of the countries that we have seen working well. Unfortunately, Brazil, South Africa, both are behind us in terms of the evolution of digital payments. They look up to India largely for taking inspiration. And we don't have many examples from similar minded countries or similar countries. And that's why I had to focus on other countries like Poland, Indonesia, maybe Korea, where some innovations have happened, some of which have failed, some of which are seeing some success. Like, for example, in Korea, what some of the fellow panelists did allude to, the GST kind of rebate has worked very well to get merchants to accept digital payments. Now, can that be a thought process in India? Maybe. So rather than saying MDR is 0, probably we can look at the other alternative where some of the tax benefits could be passed on to these merchants if they accept digital payments in some sense. But that's few points which I have.
Right. Mr. Sambamurthy, can I come back to you? So, I mean, you did refer to this, but the question from Yashwant Kumar is, unlike the NPCI, will the NUE drive the ATM and POS terminal directly? I'm assuming it means expansion.
That's an interesting question. Yes. And you see, the sense is that NPCI is in B2B business. That means it's only deals with the banks, right, who have got the accounts, not B2C.
Yeah.
If it is B2C space, then the umbrella organization can also put ATMs, can also put POS machines, right? But that would be, if it is only fintech collaboration, it's all fine. It all depends on the shareholders, right? Supposing the shareholders are all banks, and then the umbrella entity cannot compete with the banks in terms of putting this acceptance in infra. But if shareholders are all fintech, and I think it can be an opportunity for these people to pay, because in fact, if we see the final guideline, scope of activities, number 4 item, I don't know, I mean, my interpretation, I'm not sure whether it is in line with what RBI is thinking. It says they can get into any other activity which would help to deepen and broaden the digital payment system. So, as I said, getting into B2C would probably improve the profitability of the organization. So, I think final call needs to be taken by the regulator. If I go, one can interpret, yes, the umbrella entity can also put ATMs, can also put POS machines and all.
Okay, so Harish Prabhu says the NUE is expected to serve the next 500 or more million customers with newer products. I ran the largest rural banking payments technology company with over 550 client banks in 25 states and 2 union territories. and a sort of a payment system for those banks on the NPCI stack. The investors have poured money over the past 10 odd years, but the company's value creation remains stagnant thanks to adoption in the pricing ecosystem that exists. Hence, what will the NUE stack do differently to drive further adoption and making money for investors, which I guess is the moot question for the day. Who wants to take that first?
For me?
Yeah, go ahead, Navin.
Sambamurthy, for me.
Yeah, okay. Go ahead, Mr. Sambamurthy, then I can come to Navin after that.
I think if you see the big capital you want to come, see, data is the new oil, right? And then when you talk of, and also there is a narrative that we have become data rich before we become economically rich. So I think today, whatever game that is happening, it's about customer acquisition. It's about getting data from the customer so that you can cross-sell products. If you see that today, why Facebook through WhatsApp, why they want to get into the payment system in this country? I don't think they'll make money on a standalone basis from the payment system, but they can get a lot of data about the people, right? Their financial profile, their even the personal profiles. They can combine with their social profile. They can build, a wonderful database which they can monetize either for cross-selling their products or maybe transfer the data, because we still don't have data privacy protection law in this country. So I think one of the attractions is probably customer acquisition is the name of the game. And then probably you cross-sell. Today, Amazon, why is he interested in payment system? I don't think he makes money in the payment system, but it probably helps him grease his commerce empire. So also Facebook, if they were coming to the payment system, I don't think he's coming to make money through the payment system alone. But if you see that 70-80% of his revenue comes from advertising revenue. So what is the business of these guys? We don't know, right? And where they make money, ultimately data is the building block, data is the tool. If they come for, basically they come for customer acquisition. That's my sense. And then which they can cross a lot of products and make money.
Okay. Navin?
Yeah, so just a quick add-on comment to what Mr. Sambamurthy said. One, I hope that the NUs don't take a path to go end-to-end and start operating instead of being an umbrella entity. But that would be a different kind of disaster. At least that's my personal view. I hope they try and remain at creating an interoperable network like exchanges do. Imagine if exchanges were allowed to trade. I'm sure we know what will happen. Maybe you'll be busy getting more questions and queries as to what really happening there. So that's one point I just wanted to make. Second, I think data, etc., is all fine, but that's a reality of a long term. And especially if you don't really have immediate use of data, you can't depend on data alone in today's business. I remember first time reading a McKinsey report in 2005 that credit card business in next few years will be all data-driven revenues, no other revenue. The reality is it's important, but it's not happened yet, right? So unless you are in an existing business of that type where you could leverage, you all know what's a business of Facebook, Google. They are in an advertisement business. They clearly know that every additional information helps them do more revenue. So it's all a very clear business model. But NUE is not into any of those business. Maybe some of the promoters may be. If they have a way to run, of course they would. So I would say that the best bet for a neutral NUE, if they are, let's say, setting it only this as a business, the best bet is to focus on use cases. Every payment business that has evolved has always evolved around the use cases. Whether you see the growth of, let's say, even my previous entity, we were there because of the cable TV payment, or let's say we were there for a train ticket payment. If you look at Paytm, that happened because of Uber payment. I think
you're talking about space, right?
Yeah. So the space that you're talking about everywhere, it's all about money, where the physical money is getting used, and how can you, is it large enough for you to create a product for that? So today what has happened is there are limited 3 or 4 products for end consumer or certain type of, let's say, flows, where you're trying to fit those products into every use cases. Unfortunately, in payment business, that doesn't work. You need to actually customize it, tailor it, and ideally create a new product for every use cases. And again, because payment is a horizontal, it can get into any use cases. Fintech is an immediate adjacency. Interestingly, the tech movement in the entire fintech is very large. Whether you talk about insurance, there are issues with claim processing. Why go far? You talk about microfinance. I mean, the entire industry is majority cash, whether in disbursement and collection. Why can't we solve it? It's about $6 to $10 billion industry every year. You talk about, again, exchanges. You see the new rules that has come where it says that every broker you're dealing with, you have to either give the payment same day or it's advance check or advance money. It's going to be a very clunky experience. Can you work with those? So I think there are huge opportunities. And as Mihir said earlier, the cash usage in the country is still very high. There are some very specific use cases where it continues to be really high. Can the entities identify those flows and work with them as a use case, as an ecosystem partner to create a solution for those use cases? And I can tell you that then there is a money to be made because you're solving a genuine problem. I mean, we never had problem in our previous organization making $10 selling every ticket. People were extremely happy because there was a clear trade-off. So yeah, payment domain will remain a tougher business, low revenue, unless there is a major outside intervention. But because of the volume and opportunity, you could still sustain. All said and done, the reality is that NPCI does make profit. It can't distribute the profit. It has grown those pools, of course, with its own effort, its own innovation, which means that that opportunity exists in our country. The size of the industry today, let's not forget, it's 1700 lakh crore. It's not small. That's the entire data available on the RBI side. And this is when our penetration is still a very small 100 million customer or 150 million. Imagine our own economy is predicted in the next decade to go double. The GDP is expected to be double. I mean, even if you double this number, it's a huge number you're talking about. So opportunity is there. There are challenges, but they are self-inflicted. If we remove those self-infliction, probably we are in good shape. There is enough opportunity. If you create differentiation, create right fitment of the product, right segment, there is a sustainable business model there.
Right. Okay, Vivek, Iyer, here's the question for you. It says, do you think that the regulation risk in India will keep some players away? In a way, many payment majors are quote unquote non-profit. 500 crore is not a large sum for them. Do you think one or more of them will set the price at zero for the next 5 to 10 years? And if the merchant discount rate is set to zero, are we not setting the foundation for digital flat currency, meaning MDR will continue to be zero ad infinitum?
So in terms of the way I see it is that the regulation is essentially a response to the risks that you see at a point in time. The risk that the regulator sees today was the digital adoption, and to ensure, because a simple instance is, you moment you go to a shop and you say that here's a credit card, swipe it for me. The store guy looks at you and says that, should I do it, because I know there's a charge on it. Instead you could actually kind of use some other form of product. Do you have a Google Pay, for instance? I mean, do you have that? I could probably use that. That's a simple instance. And to basically ensure, and that's probably the reason there was a need for a policy response. It was premature, definitely, but in terms of the fact that that was the reason. Now, as the situation evolves, the regulatory response will also evolve. So let us kind of try to crystal gaze in terms of how we exactly would kind of look at it. There is a new umbrella entity which would actually come in, which will essentially be a big player. Let us also presume that the big player basically says that there is all nobility and there is a not-for-profit organization, and it's to invest and to create financial inclusion. Even with that happening, what becomes necessary is that they will price the products. There will be competition in the market, and there will be enough of digital adoption that will actually kind of go and mention. But the moment the industry sees, even a two players or a consolidation. So, which technically means that there will need to be commercial viability. The barriers to entry will need to be reduced to promote competition. And as a result of that, the regulator at that point in time will focus on reducing the barriers to entry, which may potentially be in terms of lowering the net worth requirement. That's point one. Also, in terms of making it actually a commercially viable proposition, which will also potentially kind of get some new players into the market, and that's expected. So let's not really say, think that the regulator, just, I mean, pardon my choice of words here, they didn't really fall off the bed and get up in a bad mood and decide to kind of come up with a guideline, but it's essentially a response to the market situation. And as the market evolves, the regulatory response will also evolve. And by no means, probably, I was very emotional maybe when I said I spoke about the MDR issue, but let me also say that it was a response to what they felt was a problem. Now, whether it's a right response or a wrong response is something that is debatable. But nevertheless, it was a response to a problem that they saw. So the regulatory response would, over a period of time, evolve to what is actually there. And promotion of competition is necessary. And that is how the response will be. And by the way, the whole point of a new umbrella entity really came from the global principles of central counterparty risk. In terms of, you have a single party kind of clearing all the payments, it's critical infrastructure. Somebody targets it, and it basically can impair our system. And that's really the reason where there was a need felt to diversify. Now, naturally, you don't. If you are diversifying, might as well diversify in a manner that democratizes payments and makes it profitable. So I believe regulatory response will be more rational going forward into the future if they want to democratize payments, and that essentially can happen only through competition.
Okay, Balakrishnan Madhavan asks, he says NPCI has done well, but RBI had a huge role in that. They gave NFS, CTS, ECS. Would NPCI survive if Reserve Bank takes away these to provide a level playing field? And maybe if you spin the question forward, in a level playing field, then could the new entity also do well or have an equal chance of success? Mihir or anyone else who wants to take that?
So, as I said, as some of the panelists also said, I think the key thing that needs to be focused on is the future. What has happened in the past has happened, and there was an evolution, there was a reason for why things happened the way they happened. Going forward is going to be competition-led, as Vivek said, as Navin said, and what my view is, the use cases will be the most important in terms of what ideas, what opportunities the umbrella entity spots and latches onto that. So I think there are 5 or 6 opportunities that are currently big from a revenue potential, and we need to understand that they have not been 100% tapped right now. So we need to. So there is a huge play for the umbrella entity. Opportunities could be as varied as remittances, what Navin said earlier. They could be focused on open banking with the account aggregator kind of model coming in. How can you become a platform of platforms and ensure that the umbrella entity kind of provides some access, not only from a data sharing perspective, but also the payment initiation leg. So in the likes of UK, the way they have looked at open banking is in 2 aspects. One is data sharing, and second is payment initiation. So payment initiation right now is being done by UPI, but can this new entity also enable that? So these are just some of the thoughts in addition to the government payments, in addition to what I spoke earlier. The other opportunity that exists today is on the transit side, where while there is a lot of been good efforts on the transit space, still, if you see today in the COVID era, there are a lot of issues from a transit perspective. So why can't solutions for queue busting, etc., typically come up? And there are some fintechs and some players in the market who are already thinking about this. So why can't the umbrella entity provide that access and the level playing field for these kind of white spaces that existed?
Okay, so there's some more question, and which an interesting one on user behavior, but I'm going to come back to that in a second. We've got an audio question from Vipin Surelia of Visa. Vipin, if you can hear me, go ahead. Okay, so I don't know whether Vipin is hearing me and is responding. But while he does that, Krishnanan Tripathi from ETV Bharat has a question for Vivek Iyer and Navin Surya. He says, how do you propose to change user behavior of retail users who are getting used to free payment services like free email, free social media, free everything, newspapers, or close to free, and therefore you suddenly you want to levy a cost on transactions. So Navin, do you want to go first, and then I'll come back to Vivek?
See, I can tell from my experience that every time you give a valuable service out, and especially to the mass consumer, not to the 100 million customers who are oversupply of the product, there's never a problem to pay a reasonable fee. Again, I'm going back to my example. If we would have launched IRCTC ticketing services to an audience like us and would say that, okay, give us a $10, we would say, no, I'm looking at cashback. But because we were going to a migrant worker or a genuine customer who's using this, who had to spend otherwise a half a day or let's say a couple of hours, he never mind that extra $10. So it's about relevance of the service and what problem are you solving. I don't think this free phenomena is right and as played out always that is what really creates adoption. It creates a temporary adoption, but for it to sustain, it has to be a valuable product, solving some problem, giving some benefit to the user. If you're genuinely doing it, you will always win in the market. That is what drives. They don't go in a payment product because you want a card or a wallet. They go because it solves a particular problem. Payment is always a means to an end. It's not the product.
Got it. Okay, that's a nice philosophical touch as well, Navin. I think Krishna Tripathi of ETV wants to pose the question as well. Krishna, go ahead.
My question is to Vivek Iyer also. Personally, I believe MDR was a very big entry barrier. And I also don't agree with the view taken by Mr. Navin Surya that IRCTC comparison doesn't allow to this thing. People have become used to Facebook, social media, and many other services. They also they are also coming up with the payment services. It will remain a big challenge. How do you propose to change the user behavior? The same question to Mr. Surya and Mr. Vivek here again.
So let me make an.
I think you've answered that. Unless you want to add anything to that, and then
I will say offline I could give hundreds of examples, but we can't go on like this. So I will let Vivek answer that.
Okay.
I mean, there are hundreds of examples.
Go ahead, Vivek.
So I'll make an attempt at it. It's see one of the big challenges of free services is that you actually introduce a free service for the purpose of actually getting people hooked on to a product, understand how good your product is, and beyond a point, you need to have a proper value proposition. So, I mean, let me give a very simple instance here. You ask me a question, I give you a response, and if you like my response, you will want to talk more. And if you would want to talk more and you genuinely see value in my conversation, you will say that let's meet up and have a separate conversation. And if there can be something that will be beneficial for both of us, it becomes a long-lasting relationship. It's a choice that both you and me make. And essentially, that's very much like a customer. You're right. There may be someone who will say that, sorry, it was good to speak, but I really don't have time. But there'll be someone who will say that let's have that conversation. Every person who runs a business is looking for a customer who basically appreciates the service that they provide. And there will be every time a new service provider who will be around the corner, who will be offering something free for customer stickiness. And there will be some customers who will move from product to product to product, looking for the free service. There's nothing wrong in that. I mean, that's a customer behavior of that particular customer. That doesn't mean every customer is that way. But over a period of time, every person will actually see the value of sticking to a particular service provider. I mean, take an example of a bank, for example. If you're with a particular bank, you go into a particular branch and take the service, you see the same teller. There is a certain relationship, a soft touch that basically comes in there. That's an expectation, invariably for every customer from that every business has. So, is it an easy answer? No, it's not an easy answer. And which is why also Navin said that there are many examples that he could potentially in terms of mention. It all depends in terms of what's the customer you're looking for and what's the customer looking for in.
Right. Okay. So here's a flip point, and this is also important to take on record. The Sudhakar Kaza says the big problem is new products come at reasonable price. Suddenly, somebody in the policy hierarchy wants to win some brownie points, and the campaign to make the product free starts. The moment it becomes free, all further innovation stops. So, is that true, Navin? I mean, is that how it works out always?
Well, it creates a big if and but in your mind, right? It definitely dampens your spirit. I mean, an industry which is growing rapidly. If you see during demon time, when the demand was high, the entire payment industry, even in the total sum grew. At this time, while digital, because pie has shrunk, the digital has grown. Yeah, we could attribute it to retail, many other things. The reality is that suddenly that excitement to deliver 20 new solutions in industry in today's time, I'm being honest, I'm in part of thin and thick of the industry. I'm not seeing so many interesting solutions. I saw the demo on firsthand. We saw 20 overnight solution coming up because industry is suddenly in mix of too many issues. So it does affect, of course it does. It will not be permanent, but obviously it does dampen the spirit of entrepreneurs.
Okay. Ashish Sharma asks, and Mr. Sambamurthy, let me come to you. Do you think these new entities should act like umbrella product providers based on their market needs and route the demand created to the banks and take their share from the final profit generated? That would help bring more or build more homogeneous product offerings. And yes, it may get into the shoes of the innovative banks in many cases. Ashish is from ICICI Bank. You're on mute, Mr. Sambamurthy.
Hello?
Yeah, go ahead.
No, what does he say? He says that they share the profit with the banks, or?
Yeah, I mean,
What does he say?
could they act like new entities? Could they act like umbrella product providers and route the demand created to the banks and take their share from the final profit generated?
Maybe it looks like an interesting model, but it all depends at whether NUE would accept that kind of thing. But again, at the end of the day, if the MDR is zero, I don't know which organization can make money. I'm not very sure if the MDR is zero. But there is scope for innovation in this. If you see a P2M transaction, that's where I think real money is there, where even though we have 1.6 billion kind of UPI transactions, most of them are P2P. I think P2M is not a major share, which leads to a major share. Right now, there are 3 banks involved. Supposing I just want to buy something, so I have my own bank account, and then the merchant has his own bank account, and the acquirer has his own bank account. Can we have a situation where you have 2 wallets? As a consumer, I have 1 wallet. As a merchant, he has his own wallet. So just let there be a transfer between 2 wallets. I think we need to disrupt probably the business model which we have inherited from the card systems. And this kind of model, I'm sure that I understand that works in China. So they disintermediate 1 bank, at least 1 bank. So as a consumer, I pay from my wallet to the wallet of the merchant. So I don't know whether this is one way of probably overcoming the issue of MDR.
Okay.
And profit sharing and all is more complicated affair because there will be a lot of taxation issues and there will not be any transparent process because the allocation of costs, allocation of revenues is a big challenge. I don't think any NU will come up saying that, okay, let us pool the profit and then share. But I'm not sure that whether it works.
Okay, so I'm going to head for final sum up comments now. So before that, let me add another quick one for you, Navin. Anurag Prasad asks, shifting from NPCI to the NUE, there has to be some inertia. So how do you propose to make it lucrative and what should a viable business model look like?
See, as I said in my first initial comment, the challenge is expanding market versus kind of duplicating. You have to sift when you're duplicating, and then you're dealing in a very different strategy, and then you're stuck again with those 150 million customers. But if your strategy is actually to expand, it's very easy for people to come to you for new things, right? And as you do need new things, at some stage you will figure out that there's also value adds that you could do for existing networks, and then create better pipes for you to again drive even the regular transactions that are happening. So again, I would again caution and urge and think that way. And I think most entities and most of the consultants are here to advise them that it would not make sense to create another NPCI type entity with similar products on a day one. Yeah, eventually you may have all the products because that will be need of the hour. But unless you're able to bring something to the table which is very different, it's already quite many things available on your thali to the customer. Unless you give them some more interesting, spicier or a sweeter thing, why would he take it? If you're going to give the same thing more sweet, more spicy, it's not going to work. It's going to be temporary. Right. So I personally believe that strategy itself will be flawed, and I hope people are not attempting that. That's not going to help the ecosystem or the cause.
Okay, so just as we head to close, sum up from all of you, and let me start with Vivek. So in about 30 seconds to 45 seconds, I think if we are all agreed that this market is to grow, and we are agreed, per capita digital transaction in the retail space has to grow. I mean, the numbers are already there. We've got examples like Singapore and others to look at. If it has to grow, then what's the best way to do it? And if a new entity is one of them, so be it. And if that new entity comes, then what could be the 1 or 2 prescriptions which will ensure that there is a continued level playing field for all, including those maybe who are showing interest right now. And of course, the consumer gets a best deal possible, but which is not necessarily free, if I may add that. So Vivek, why don't you go first, and then I'm going to go backwards.
Yeah. So in terms of, I think personally, a certain kind of products which I think which would be pretty useful from a new umbrella payments entity standpoint would be in terms of actually looking at this ticketing, tolls, bus, trains, actually in terms of what are the kind of payments services that can actually be possible there. In terms of you get into a bus, instead of cash, you actually use a card. And those kind of aspects from payment standpoint, low hanging fruit, we can address that as first piece. Secondly, more innovation around feature products. That's around feature phone products, essentially in terms of offline payment services. More innovation on that front is technically important. Obviously, it has its set of challenges from a clearing and settlement standpoint, but keeping in mind the risks there. These two are immediate low-hanging fruits that I see that could potentially, in terms of be useful and be complementary to an existing setup and actually kind of provide revenues as well.
Okay, thank you. Navin, over to you.
So I think one common theme is that don't think what exists today and an immediate next 3 or 5 years. I think you need to think 10 to 20 years minimum, at minimum. What is the world going to be in next 10 to 20 years? There are so many new things that are happening. There are so many new technology coming. The behavior of the consumer around those technologies and social interactions and the media, everything is changing. So that's the first thing. Keeping that in mind, I'm only hoping, one, that the government would keep the intervention to the minimum, if at all, only to correct and if genuinely required. And from RBI, we expect that probably they will not carry any baggage of any specific number of licenses, whether two less, two more. I think they should just allow whoever deserves it on the merit, whoever has the right innovation to expand the market, definitely give it. And to the entities, very clearly that don't look at duplication, don't look at those immediate low-hanging fruit. Please think out of the box, create, like NPCI is a good example, right? They thought of IMPS, which nobody in the world thought through. Real-time payment, account to account, it's successful. Think that way, what is missing, create that, you're surely going to be successful. Yeah, those are the simple messages.
Okay, thank you for that. Mihir?
Yeah, so I think I echo some of these points. The first point that I would like to say is innovation is going to be critical. As I mentioned, some of the use cases, look at the different white spaces that exist today and see how you can make a mark in the payment space. The second is think of payment adjacencies and see what kind of analysis you can do with the data that you've actually collected, and whether you can do it the same way, some of these global card schemes do it today globally, and generate some revenues from there. The third thing is the consortium itself that will come together. So I hope that there will be a diversity, there will be mix of players coming in to form the consortium, and it will not be one large kind of entity trying to make it more like a large closed loop system for the country, leveraging its customers or distribution touch points. So I think these are some of the points. Obviously, the point on the regulatory policy is something which you all discussed, and we agree that pricing and things like that should be left to market forces and more on the competition. So that's few of my points.
Okay, Mr. Sambamurthy, last word.
I think first of all, we need to realize the zero MDR does not serve the cause of either digital payments or a digital economy. I think the government and the regulators need to do some activity on that. Number two, the present user base of UPI is only 100 million, even though they pump in 101.6 billion per month. So there is an opportunity to increase it to 600, 700, and this will be possible if only we have mobile payment solution on feature phones. And the QR code, I think, is the way forward to do that. I think that's where the business and NUE or any other organization need to think of innovation is have mobile on feature phones. I think that's where they can probably penetrate and make some money. And government as well, I think, need to provide some incentives as well.
Okay, that's a good note to end on, and I think a good note to also acknowledge that things are moving in the financial payments and overall financial expansion and inclusion space in this country, as more and more people are able to access and more people are able to transact, and that should in a way contribute to the growth of the economy, even as the economy itself grows to some of the ambitious targets that have been set and have already been referred to. So on that note, we are pretty much out of time. So I'm going to extend my thank you for inviting me to lead this discussion and hand it back to Mani Mamalan. It's over to you.
Yeah, thank you, Govind. I think there's been an amazing 1.5 to 2 hours discussion. I think I didn't take the eyes off the screen, and I'm basically just blessed to have so many good thoughts coming from so many good speakers that we have on the panel today. At first, I think one thing which basically came out of this discussion was before I start that, I think let me tell you what I'm proud of. See, I assume basically if I was when the birth was happening for myself, I was basically, if I was born a couple of basically notches away, I would have been in Sri Lanka. Bit further, I would have gone to Burma or Thailand. And very near, I would have been in Bangladesh. And if I was not so lucky, I would have been in Pakistan as well, or Maldives on this side. But I was born in India. So please believe you have been lucky to be born in India. There's a huge opportunity and a place to basically live and work for and do business in. I think that's the greatest advantage of all of us, which we are sitting on. I think so. When we wanted to basically be here, I think it's a great place to be. There are some shortcomings like Jugaad and non-Jugaad, but I think it's still with Jugaad and innovations coming. Innovations give to a lot many things to basically aspire to and an opportunity to sustain. And there is an intervention from the government, as basically speakers also said. But I think all of us know, all of us should basically only believe is ultimately there is a guy who is sitting on the road, whether it is in a village or a small town or a city, and that guy is going to pay maybe a single penny or a paisa or basically a couple of paisas, but he's the purpose of your whole businesses. And if the government, the policy-making people, regulators, and technology companies or service providers and all of us, we think about him, I think all of us will be making money and nobody's going to be a loser. But the problem is, one of us always believes other guy is trying to basically cheat the other regulator or regulator. The government thinks basically the companies are going to cheat or exploit and so on and so forth. And so I think that's one of the things that we need to change, the connect between all of us, that there is a common purpose and we have to deliver to the common people. One. Second is what is actually we have to do is, I think Mr. Sambamurthy touched on the point, is that the third important point that he said about we should not be replicating things what other markets have done. We have been always an innovator and we have always willing to innovate and have products and services that will be very different from a geography to towns to towns, because the smaller basically towns and smaller population or a population like it is not only 10 million or 10 crore people which is basically bothered about. It's 100 million people. It has to be another 500 million people that has to be inclusive. Those products has to be there. And Mr. I think Mihir also touched on the point of smart cities. We should basically just be there. I don't know why basically that's a huge opportunity that all of us should be looking at, and that's not basically expanded. The last thing is, the greatest thing that has happened in India is the IMPS. And of course, basically, Navin said it so many times, but for IMPS, I think nobody must be talking about NPCI. And even basically the regulators or basically other people may not be talking about having another basically a new entity. They would be always thinking about, okay, if assume basically IMPS and NPI was not there, and we won't be talking about data, we won't be talking about payments, we won't be talking about an alternate guidelines to basically just set up another NUE. Thanks to IMPS, thanks to UPI. And the last but not the least is, which place on earth you will find more data? It's India. Nowhere else you can find data, a consumer data. And so be happy. And there's a place in India for all of us to succeed and survive and live happily. All of us need to get connected to each other and serve the common cause of the public, the last man on the street. Thanks a lot. Thanks for basically just being with us. And thanks to the speakers, thanks to Mr. Sambamurthy at first, and thanks to basically Navin, thanks to Mihir, thanks to Vivek, and thanks a lot, Govind, for a short call notice. You said, I think it's money, I'll be there. And I remember you long back, decades back, I think almost 2 decades back that we met. And looking forward to another show with you, Govind. And thanks a lot for all the audience who have been there. And from my warmest start, and with a EPS day on the back of my show, and I'm going to take a leave. Thanks a lot to you, all of you. Thank you.
Thank you very much.
Thank you all. Thank you.
Thank you.
Thank you. Thank you, Mr. Murthy, Mr. Navin Surya, Mr. Gandhi, Mr. Mihir Gandhi, Vivek Iyer, and Mr. Govindraj. And a very special thanks to all the participants across various channels. Thank you. Your participation, like I say, is always encouraging and motivating us. Thank you for being with us. At this moment of time, when I take leave from the audience, please, EPS staff, stay back, because now it's your time. It's the EPS day that is coming through. So please stay back and enjoy the show that's going to come through. So let's begin the EPS day, EPS show, and I would request the digital team to play the ninth EPS day title promo.
Yep.
Okay, welcome again to the EPS Founders Day, or the EPS Day as it is now called. So let's begin that day with a auspicious note. Let's play the Rangoli video by Priyanka. Digital team, can you please play the Rangoli video by Priyanka? It's coming your way. Today it's your day, so please hang on. All EPS team are expected to stay back. Thank you. There's a lovely Rangoli video by Priyanka. I'm sure the EPS team would have enjoyed this. The theme for today, for the EPS day, is staying together. And this is a crisis time. I mean, we all know that, right? We all are facing such a lot of problems. We are unable to go out of our houses, and various constraints that we have in doing our day-to-day work. And yet we have to stay there. We have to stay together. We have to pull this crisis together. And that's the only way we can do it. We cannot be pulling this individually. We have to stay together and pull this crisis and across, such that we all are back to our normal days. So far, I think the APS team has stayed together, and we will continue to stay together. And that's the wish of the management and the EPS team also. So what's so special about it? Today is a 9 years of EPS. Okay, so it's called the 9th EPS day. It's a day to remember the founders of EPS also. Very important, because the founders years ago, they became the entrepreneur